Wall Street Unplugged looks beyond the regular headlines heard on mainstream financial media to bring you unscripted interviews and breaking commentary direct from Wall Street right to you on Main Street.
What's going on there? It's May 8th. I'm Frank Curzio. It's the Wall Street Unplugged podcast. We'll break the headlines and... tell you what's really moving these markets. I have to start out with this. How about those Rangers and New York Knicks? Rangers won in double overtime last night. What a game. Came back in third period. Knicks up 1-0 on the Pacers. Play game 2 tonight. Jalen Brunson is amazing. Hey, what a great story. I don't know if you remember, he was traded to the Knicks a couple of years ago. I mean, the New York media shit on this poor guy. It's a terrible trade. Why'd you get him? He's not going to be the answer. I don't know if he's the answer to a championship, but man, having those three guys from Villanova, those guards just, it's electric. It's hard to hate this team. But it's nice to see the Garden rocking again. It's been such a long time since New York had this kind of excitement in the playoffs. And we're talking about a major city here that's just been horrible with their teams for such a long time. Rangers have been okay the past couple of years. Knicks made the playoffs last year, but still, it's been this massive drought. But it's really nice to see, and you could see from the fans, right? If you're watching these games, seriously, it's so electric. It's so electric. Just so excited, really good stuff, really good teams, and hopefully they keep doing what they're doing and go further and further in the playoffs. Nice job. So today I want to start with probably one of the most popular topics in terms of what my audience likes, and that's uranium. I know you guys love when I talk uranium, but I have Amir Adnani on, which I have every few months or so. Get the most downloads for Wall Street Unplugged, which, by the way, one person reached out on Twitter and said, hey, Frank, and tagged Amir on my Twitter at Frank Curzio and said, I'm up 500% since you had Amir on your podcast a few years ago. And that's what this is about. That's why I do this. So the Wednesday podcast, we used to have a lot more interviews. We're going to go back to more interviews. I'm going to start interview high-profile guests, people that could help you, not people that are just going to bullshit and talk their book or whatever. I mean, you know, I want to have people on, just like when we have newsletter offers and do it's got to be the timing. It's got to be the timing. I mean, if I feel an opportunity for you guys, or I see someone that has something that's really exciting to say at the opportune time, I'm going to have them on. I'm going to interview. You're going to see more interviews going forward for Wall Street Unplugged. But whenever I have Amir on, it's awesome. So many downloads, and everyone's talking about it. And even last year, I had him on a couple months ago. I should get an update since, you know, UEC is through the roof right now. But I had him on a year ago, and this is when uranium was like 40, and he was like, it's probably going to go 100. I think it might have been like February or March I interviewed him of last year. And man, it just surged. And it was great because the stock did fantastic. He's awesome. And look, uranium is an area I covered for a long time. I visited sites. That picture of me holding yellow cake at one of the facilities in Texas when I went with Amir. For most of the publicly traded companies, which is not that many, right? It used to be a lot more pre-Fukushima. Used to be a ton more in the 70s. I mean, all oil companies or uranium companies back then. There's a ton of uranium here in the U.S., a ton. They just, with all the laws and oil companies like, F that, we're just going to go to oil, natural gas. We started shipping uranium from Russia like crazy, importing it, and now things are changing. You're seeing government approval. The government supports it. The left supports it. Oh my God, they like anything? Holy shit, I thought they hate everybody and everything. But now they're realizing, holy cow, you know, maybe uranium's not that bad. We want clean energy. We want to support climate change. Well, I mean, uranium is the best source, right? Nuclear, come on. Safest, cheapest baseload power, 24-hour baseload power. Again, 24-hour baseload is key, right? You have power all the time. Not when the sun comes out, not when the wind comes out, not when the water runs. Now uranium prices starting to surge again. They surged to over $100 a pound and then pulled back in the 80s, which is natural for any trend. And, you know, stocks got hit a little bit. When I say got hit, they were up probably about 100, 200% from their lows. and they got hit maybe 20, 25, 30%, some of these names. It wasn't that big of a hit, but that's what happens with all growth trends, right? We saw it with NVIDIA several times. NVIDIA pulled back 900 to 700. Now it's going back up again. See it a lot with big growth trends. It's not this straight up thing like, oh my God, things are great. No, it's kind of like a washout, doubting, and then boom, this trend comes in and you get new buyers. Because now you're seeing uranium start to move higher again. I think it's in the mid-90s. And it's going to surpass those previous highs. I forget where it was pre-Fukushima, 120, 130, wherever it was. I forget. But we're going to surge past the recent highs. Because it's not based on momentum. This isn't a momentum trade. Like, oh, we got to get in. We're going to miss it. This is fundamentals. It's like gold. This isn't like momentum. This isn't about, oh my God, a safe haven. And this is fundamentals with gold as well. I mean, central banks are buying like crazy. And there's not a lot of gold on the market. They haven't produced a lot of gold because prices were low. And inflation went higher. I mean, even as prices went higher, inflation surged. It's still, the margins weren't great for these large companies to go and acquire junior miners or whatever. But these aren't momentum trades that you're seeing in raw materials or you're seeing in copper. This is fundamentally driven in uranium especially. And we knew this story for a long time. It's just a matter of the adoption. When was it going to happen? Now, we're going to see an explosion of electricity demand, but AI is what really pushed the uranium story. We all knew that, okay, you got to go to uranium, electricity demand because of EVs and stuff like that. And EVs are still going to drive, right? I mean, it's going to drive growth. It's just not going to be as big as everybody once thought, but they're not going away. They're not going away. Especially when Tesla produces a low-price EV. China like crazy, just electricity demand. And electricity, there's an explosion of electricity demand. And when I say an explosion, I'm not talking this is going to happen 10 years from now or by 2050 and zero. We're not talking about bullshit dates here. And if you look at forecasts for EVs, you look at so many forecasts that go out past 5 years are insane. And you see them always dial them back tremendously, right? That's what consulting firms do. The crazier the forecasts have, the more people are going to buy their reports. So let's get stupid with our forecasts. Doesn't matter if we're wrong. Nobody's going to care. Just let's put it out there. Sell, right? It's all about revenue. So we're not talking about 10 years from now, 2050. We're talking about right now. It's going to be from data centers. You look at AI, the next phase of this incredible growth trend. I mean, we're in the early stages here. We're in the first inning, guys. We're in the first inning. You have no idea what's going on in AI. I mean, AI is so unbelievable. People think, oh, it's NVIDIA. It's not NVIDIA. I mean, wait until Apple in June. And wait to that event that they had the developers conference. I mean, that's when you're going to see it go crazy. It's going to be on steroids because they're going to announce so many things within AI, and everyone has an iPhone. Samsung, right? Most people have iPhones. But once iPhone, I mean, it's the one device you have on you every second of every day. Even when you go to bed, it's 3 feet away from you. But everything that's on the iPhone is what? Tens of billions of pictures, videos. You have a professional camera on there already. Now you're going to be able to take a picture and then just tell your phone, Siri or whatever, just say, hey, you know what? Change the background. You don't have to go into cropping. You don't have to go into all this stuff and be a professional editor. You could just tell it what to do. And how it's going to do it for you. Change the background. Put a lightning bolt in the background. Have it raining a little bit. Lighten this up. Take this. Put it there. Do that. I mean, you could do that right now. But you can't really do it on an iPhone. Now you're taking this, and you want to talk about scale. I mean, we're so early in this trend right now. So when you look at electricity and the demand we're going to see, we're going to require massive and massive amounts of electricity as this gets bigger and bigger and bigger. We're going to see likely, and this is probably conservative, a 30% rise in demand in just the next 5 years. I know what you're thinking, 30%. I think you're going to say 10,000%, 20,000%. If you look at Google, Amazon, Microsoft, NVIDIA, and you say, well, 30% growth, it's not a big deal. These companies grow a lot of their divisions by 30%. When you say 30% growth in electricity, it's enormous. The average growth rate going back to the early 80s is around 1.5%. That's how much electricity grows. It's going to grow 4x to 5x. That's a monumental change. A change that most electricity companies are not prepared for. They don't have the infrastructure in place. They don't have the inventory in place, which they lock in for a couple of years, usually natural gas and coal. Now they're starting finally to lock in longer-term contracts with uranium companies. And what are you seeing? Uranium prices go through the roof. And it's happening at a time where there's very little supply of uranium, which is crazy. And I won't get into the fundamentals and get into the weeds, but you guys can read the stories going on in Russia and Cameco and just supply coming off the market while the demand is soaring. Simple economics. But these trends are not changing anytime soon. So prices are moving higher again, and they're going to hit new highs in the months, not just the months, the years ahead. So how do you play uranium? How do you make money? You could buy, an ETF that focuses on the spot price, which I think is always good. But a lot of people think, okay, let me just buy the juniors. Holy shit, I'm going to make a lot of money. Not so fast. That's when it pays to listen to people sometimes. Because no one's really going to tell you this. You're not allowed to say this in the mining industry. You're not allowed to say when a company's a real piece of shit and they're screwing you over. You're not allowed to say that. They don't like that at all. They hate that. But unlike other industries, this happens at the top. You don't see shitty people with shitty company. You see that, right? In junior miners, you see that in biotech. You see that in crypto. Younger people just trying to steal money from individual investors and create shit. No. You see this from the top, the bullshit. That's what's different about the mining industry. Because you have to be very, very careful because the structures of these companies are fucking horrible. They're horrible. And you need to be aware of this as an individual investor because again, it's being a doctor. I'm not going to look at certain things that you're going to look at certain things all the time and say, this is what you should do for yourself and you should eat like this. Whatever. You're in the industry. I'm in the industry. This is sometimes hard to figure out because you're not a professional at it. This is something that I'm a professional at. You're a professional at something else that you listen to this or your job or whatever. And if I have questions I'm going to ask you, you're going to be able to tell me things that I didn't really know about maybe my HVAC system or how to maintain it better or whatever. I don't know that stuff. I know what an HVAC system is, just like you know how to buy a stock. But when it comes to the structures of these companies, you have to pay attention because it's an absolute joke and they're structured to steal from you. Because most people say, uranium's going higher. I'm just buying all these companies. I'm going to buy Denison. I'm going to buy UEC. I'm going to buy GoviX, EU, go down the line and Cameco and a bigger play. I'm going to buy all these stocks. You're going to do well. Well, you got to be careful with the juniors, especially with a company called GoviX. Because GoviX is a piece of garbage, and it's run by one of the biggest names, right? Robert Frieden, which is his son runs this company in the world, right? This guy's incredibly rich, probably one of the top, if not the top person in the whole industry. Now, they've been promoting this stock pretty much for 10 years. Saying you should take on the risk of Africa, because they have assets in Africa that they're going to develop, high-grade uranium. This is going to be great. We've been told that we're going to develop this. I mean, basically, I look back at 2017, and they said they'd be in production by 2020. We're in 2024, they're not even freaking close, right? And they'll never develop these things. Now, for a fact, they're not going to develop them. But yeah, promoters telling you got to buy this stock and take on the risk of Africa and unexpected military coups. When I could buy UEC or Encore, who are going to produce uranium in the U.S., I mean, if you look and you see GoviX, I mean, just look at what the stock's done. I mean, that bullish case of, hey, Africa Mines is going to get developed. It's going to be great. It's going to be great. I mean, you don't need that with uranium prices up so much. I mean, uranium price up 5x in 2017 while the stock was trading at the same price. And in January, I tore this stock apart. I put it on Twitter at Frank Curzio. And I said, it's a piece of garbage. Avoid it. And I did the analysis on it. And I got a lot of shit for it, which usually means I'm right. When people are fighting about, you don't know what you're talking about. I'm going to own this stock. I don't have a stake in the fucking company. I don't even care. I'm just trying to help investors. I'm not short the stock. I'm not pumping it. And then, making sure that, you guys are going to crash it and sell it. And then I'm going to make money, which is legal. That's legal again. How they, it's not illegal. I can't pump a stock and everyone buy it and sell it, right? You go to jail. But the short sellers are allowed to to short the shit out of it, then create these reports, have disclaimers on it and say, hey, this information is deemed to be reliable, but may not be. And we may be in and out of the stock. We're in the disclaimer, read disclaimers. So they're basically front running it, telling you this story. It could be true or not. They don't care. It crashes and they sell and make a fortune. That's legal. According to our SEC, that's fucking legal. You got to love it. But if you look at this company and how it sells mom and pop investors on this dream, I mean, you're looking at since 2017, the share count has doubled, right? From 2007, 320 million, 640 million, massive amount of warrants, doing these capital raises, having big name executives at the top running a company. It always makes it easy to raise money. Oh, you want to follow, right? That's what they say. That's the number one rule of mining. The number one rule everyone says is make sure you're investing in the right person. That CEO, that big name investor, that person that's been there. And that's terrible advice because you could have done that and got fucking annihilated over the past 10 years. If that's the advice you follow, because everything crashed. The number one thing should be, hey, does this market make sense for me to invest in uranium or gold? If gold prices are crappy, don't invest in a sector. Especially when interest rates are zero for 10 years and they're trying to tell you, well, that's good because gold doesn't pay anything. So as long as interest rates are zero, it makes the case, right? They just try to find cases to buy gold when in reality, when interest rates are zero, every single asset class in the world is going to go high, except for gold because it's seen as a store of value and a safe haven. And it's significantly underperformed the markets over the past 15 years. And it's outperforming the markets finally this year. And not by much, by like 6-7%. You would think it's more because they say it's at all-time highs. Everybody's excited, but I'm glad I own gold. I'm not saying not to own it. But if you look at GoldVX and how much money they raised from 2015 to 2023, they raised over $140 million. It's in Canadian. Includes 16 separate rounds of financing. This is a junior. They don't generate revenue, so this is what they have to do. Most were done through pipe deals, so you're not going to see all the details, right? You're going to see, and almost all the financings included what? 2 to 5 year warrants, which companies are going to say, warrants are good for us because when you exercise them, we get money and we get cash in the bank. In the meantime, it's terrible for you because they dilute the shit out of you, okay? They're always going to spin something. I'm trying to help you out. I have no stake in this. Now, 140 million may sound like a lot, but it's still, the money they raised, it's still, well, $200 million short of the $339 million initial capital costs needed to build out their biggest project, which are probably going to destroy the name what's in Africa, Mandiola Project. We'll call it the M Project, since I'm going to say it a few times. So this $339 million estimate from GoldVX, and this is their press release with the stock IPO'd in 2014. They said it's going to cost $339 million to build this out. Today, if you look on their presentation, they say it's going to cost $343 million to build out. That's from the latest presentation. So I guess inflation doesn't apply to projects in Africa. Maybe it's me. It should be at least 40% higher than that number from 2014 till today. The dilution from those financings, stay with me here. In 2015, GoldVX had 168 million shares outstanding. After these financings, today, the company's outstanding shares is 812 million. That's an increase of 383%. If you don't understand what that means, that's like robbing you of 383% gains in the stock. Except instead for the stock going higher, the share count's going higher. So the market cap's going higher, but the share price is not appreciating because the value of the company is getting bigger, but the share price isn't moving because you're increasing the outstanding shares dramatically by almost 400%. This explains why the stock's down 50% since 2021, despite uranium prices being up over 400%. And by the way, that dilution, it does not include the $249 million in warrants, or $249 million in warrants, and the $52 million in options that are outstanding. If these get exercised, it would increase the total share count to $1.1 billion for a company that's not generating revenue that would never get its mines developed. $1.1 billion. We're talking about SPAC shit here. We're talking about like Virgin Galactic. We're all going to space. Now the stock's $1. You're not going to space. Got to look at this stuff. And by the way, I don't see those 249 million warrants, 52 million options outstanding get exercised because it would have to happen at a 25-cent price, and it's 5 cents now. It crashed. But based on that dilution alone, what you need to understand, and you see this a lot in mining companies, it's almost impossible for you, the shareholders, to make money in the stock, especially GoldVX, unless it's African mines go into production, which is never ever going to happen. So now GoldVX, like I said, does not generate a lot of revenue, relies on financing to fund operations. Now, for a company that's not generating revenue, the executive chair and CEO, that compensation is really steep, right? Freeland. If you look at him, his son's running the company. For example, the executive chairman made $2.4 million, while the CEO made $3.1 million in compensation since 2013. To me, that seems like a lot of money to pay two people running a company that IPO'd in 2014 at $2.14. and it trades at 6 cents today. So executive chairman, why this stock absolutely got annihilated, made $2.4 million, and the CEO made $3.1 million. It's also a lot of money to pay two people who are not all in on GoVX. I can't explain this enough to you. Because the one thing I freaking hate is when I do like a stock, which is rare, when I like a junior minor company. And when I like it and the CEO, is able to give me all the details, answer my questions, I'm like, hey, this is a pretty good situation. I think it's good to bring my investors. I like it. Maybe I'll invest in it, whatever. The one thing I fucking hate is when 3 months later they call me back with another idea that's in a total other industry that I should invest in. Hey, I'm on the board of this biotech company. I'm on the board of this marijuana company. You might want to get in. What that tells me is you're not 100% focused on your company, which I'm investing in. The biggest red flag, and you see that happen time and time again. If you look at these guys, the executive chairman and the CEO, they're not all in on GoVX. They'll executive positions on a bunch of other mining companies as well. So they're not really focused on that. They don't care. They're making money while everyone else is losing money, right? You're making 2.4, 3.1 million. Why do I give a shit about investors? And when we need money, hey, I have a big name, be able to raise money, and fine, we'll just screw the shareholders. They're not going to learn. We keep raising money from them. You got to be aware of this shit. Because everyone on Wall Street and everyone, they're all out to get you. Everything works as long as you could sell the garbage and the shit to the retail investors. What happened with SPACs, it happened during the credit crisis. As long as you could sell the shit and convince the retail investor, these guys get richer and richer and richer, and they'll never get punished. The SEC will never punish them. If they wanted to punish these guys, you would have saw so many CEOs in jail after the credit crisis. You would see all of these management teams, almost all of them for SPACs. I mean, these guys made an absolute fortune while everyone got wrecked. They're not going after them. They're trying to go after crypto companies, the SEC. They're trying to go after Tesla now. Well, you got Facebook, TikTok shut down. You say, well, it still works. Wait, just wait a couple months before the election. There's no way TikTok is going to be online and working and operational during the election. Guaranteed. Now they're going after Elon Musk again because he has another free platform. They're doing it through Tesla. Constantly going after this guy. That's the way it is. But not only that, it's a lot of money for these guys to make, considering the massive losses shareholders endured holding GoVX for the last 10 years. But it gets worse. So in January, when I wrote this post on Twitter, the government of Niger announced, and this is where their biggest asset is, that mine, the M mine, right? Suspending the granting of new mining licenses and would begin an audit of the mining sector. So this followed a successful military coup a few months earlier, which resulted in the formation of a new government. And it was so bad, the U.S. said, you know what? We're removing all of our military personnel from the country. Total, right? This is why you don't invest in mining companies that are not in the right areas, right? Because it carries geopolitical risk. And I've seen it happen time and time and time again, where the government just says, you know what? We're taking this over and bye-bye. Too bad. Investors get nothing. Now, after this news in January, GoVX came out, they assured investors, hey, this news is being blown out of proportion. It's only related to the gold sector, not uranium, which was an outright lie. They lied to you. And you know how you knew that? Because a couple months later in March, they said that it's in advanced due diligence talks with a select group of lenders to raise $200 million in debt financing. And this was to help pay for its Manuela project. The company, I don't think, raised more than $15 million ever. Why the rush to raise $13 million? It was odd because they just literally raised $13.8 million a couple of months earlier. Now you're like, well, we want to get financing $200 million. Why the whole financing at once? So they knew this was coming. They knew. You should know. You see, they just didn't tell anybody. But they told you, hey, it's not a big deal. That's what they told you. So you stay in the stock. Now, the $13.8 million that they raised was fully bought because uranium prices started surging. They went to $90 a pound for the first time in like 15 years. I was like, holy shit. But I have to ask a question. For investors who bought that financing, and this was like, I think it was like 18, 19, 20 cents or whatever it was. Again, it's 5 cents now. Did they know GoVX was going to turn around a couple months later and look to raise $200 million so quickly and dilute the shit out of you? I would say no. But then on April 19th, a couple weeks ago, now you can connect the dots. Because in a surprise move, Niger gave GoVX an ultimatum. They said, hey guys, you're either going to commence mining at the Banduela site and that project by July 3rd, 2024, or we're going to revoke your mining permit. When you say commence mining, just to be clear, that means you have to actually start producing uranium, which they're light years away from doing. So if Nigeria holds true to its word, GoldVX looking to raise that $200 million. Forget it. Who the hell is going to come into that financing, knowing that their biggest asset, they're going to lose the permit on their biggest asset? And how valuable is that asset to GoldVX, the Banduela asset? It lists its carrying value of that asset at $65.2 million. What does that mean? That amounts to 96% of its total mining portfolio. So if they lose that permit, this is a zero. This is a zero, outside of maybe the $12 million, $11 million left they have in cash on the balance sheet. But now they're looking to raise $200 million. When you're going to lose what are you going to raise it for? You're going to lose the permit on this. Okay, why take on that risk? So GoldVX losing its mining permit on Mandela Mine is like TikTok losing its license to produce videos, right? It's worthless. No one's going to go there anymore. And if you need further proof that the stock is worthless, on April 25th, this is just 2 weeks ago, their auditor, which is PricewaterhouseCoopers, and you have to read this. It's great the way they tailor it and the way it reads. It's almost like you got to watch out, but you have to read it 3 times to figure out what they're saying. I'll make it simple because this is what they said. And this is financial statements for December 31st, 2023 and 22 they came out with, so, which they produced on April 25th. And I'm quoting here, "We draw attention to the consolidated financial statements, which describe events or conditions that indicate the existence of a material uncertainty that may cast significant doubt about the company's ability to continue as a going concern." So I'm going to reiterate what I said in January 26th when everyone ripped me. And again, I don't have any stake in this. I'm not patting myself on the back. What I'm trying to teach you is that there's a big difference between companies. Just because the underlying commodity goes higher doesn't mean you should buy anything. But my thesis was, why should any investor take on the risk of Africa and military coups and all this shit when you could buy UEC or Encore Energy, who's going to produce uranium in the U.S. very shortly? And these companies are transparent. They're finally having huge government support from the U.S., going to take full advantage of surging uranium prices without having to take on that massive geopolitical risk. And when it comes to investing, this is how you become a great investor. Because you invested in UEC, you made a fortune. You invested in Encore Energy, you made a fortune. These are names we've been talking about for a long time. Even you could have went to Cameco. You did well. This company was a piece of shit from the start, all the time, from the start. But so many people are in some of these names, and you have to look at that because you can't just say, uranium, I'm going to buy this, and I love this, and I love that. Even when it comes to Denison, I think that there's much better plays in Denison. When it comes to AI or anything else, there's better plays. NVIDIA's not AMD. Seriously, you look at NVIDIA, and this is what we've been pounding the table on. People are like, AMD is going to benefit from AI. AMD is not an AI play. Yet it trades at a higher multiple than NVIDIA based on hopes it's going to capitalize on AI. If you went to our live events, the Curzio AI, when we talked about AI and we held live events, we held a live event a couple, I think, 2-3 months ago now. I said, that's one of the companies you have to watch out for is AMD. I think it was at 180, 190, where is it, 150, wherever. And NVIDIA's gone up. AMD trades at a higher multiple than NVIDIA. Again, based on those hopes, it's going to capitalize on AI. Yet you look at NVIDIA, which is cheaper, is already capitalizing. It's there. You're seeing massive growth, sales, earnings, free cash flow. Demand is off the charts, and every single company that reported, all the major companies that have hundreds of billions of dollars in free cash flow, and again, Apple buying back 110 billion of its stock, generating 100 billion in free cash flow annually, 60 billion on a balance sheet. All these companies, Google, Oracle, what do they say? We're cutting back spending on everything except for AI. That means we're buying a shitload more from NVIDIA. While AMD is barely growing at all. There's a big difference. I can see if AMD was a lot cheaper, but how does it trade at a higher multiple? That's what I don't understand. How do you trade a higher multiple than a company that's showing these results constantly? And the last 6, 7, 8 quarters for NVIDIA have been blowout. They were generating like $4 in earnings. They're projected to generate $22, $23, $24 in earnings. Holy shit. In a 24-month period. That's unheard of for any company. I mean, another good example is Disney. Disney just reported. And I talk about Disney, and it's not like I have this negative tone on Disney. I just see things the way they are. Okay, I even said, listen, I think Disney is going to go higher over the past couple of quarters. Expectations were low. Going into this quarter, it was the first time in 4 years that expectations were sky high. When I say sky high, analysts significantly lowered the bar on Disney every single quarter for the past 4 years. Except this one. This was the one quarter where analysts were raising estimates into the quarter. It didn't make sense. Because Disney, right now, if you're an investor in Disney, you need to ask yourself one question. How does a company go from cost-cutting story to a growth story? Because there's been a cost-cutting story. It's not a growth story. You can say earnings are growing. They're growing because they're cutting costs. That's what the past 4 years were about. But now the street wants growth. And how the hell is this company going to grow if your business model is solely rely on streaming? It's solely relying on streaming to be its growth model. You can say, well, Frank, the DTC losses, right, direct to consumer, which is that division, have come down and it's almost profitable, but it came at a cost. I mean, have you seen any new content? Any? Barely any? On Disney Plus? And they're producing very little new content. New content is the lifeblood of streaming. It keeps subscribers around. It's not like a big library. You're not going to watch movies 100 times. You get sick of it after a while. Now there's 50 streaming platforms and you're paying for them, and you're paying twice more than what you pay for cable. But new content is huge. It's why Netflix works. It's why Max works. Yet Disney, what are they doing? Not producing new content and raising prices dramatically and throwing ads everywhere, which makes the user experience suck. That's probably why they warned that direct-to-consumer is going to be soft the next quarter. They're blaming their Hotstar Disney division, which is their international division, which over the past 3 years, especially when Chapek was there, that was the division they used to manipulate the stock, because they added 10 and 20, 50 million subscribers. Like, oh my God, we're bigger than Netflix. They were all for free, basically, because they pay $1 for the service in like India. But nobody cared if they were paying anything. They just want to see subscriber growth. They don't care if the average revenue per user was $3 or $2 and Netflix is 15, 16. Nobody gave a shit about the numbers. Chapek was like, hey, this is what investors want to see. Let's just give everyone free. Well, these numbers will go higher and higher, and our stock will go higher, went to 180. And that's why I became really negative on it. But if you look at it, Disney, Hulu live streaming is also a disaster. It's in direct competition with YouTube TV, which Google locked in the NFL package, and they're marketing like hell. You can say whatever you want about DirecTV. It's a shitty service. I hate it, but the NFL package made that company. Now Google has it. So I can't see anyone new to streaming saying, I want to go to Hulu instead of YouTube TV. But Disney relying on streaming as its growth model? Think about that for a minute. That's their growth model. Oh, this is growth. This is a future outcome. We want to be like, they're going head to head with the biggest technology companies in the world in the most competitive industry you'll ever see in your life. Giving you all this service, 10, 20 billion. We're going to spend on new content and we're going to charge you $6, $7, $8. Now they want to charge you $15, $20. And all the companies are competing against, all the big guys, they have fortress balance sheets. Google, Apple, with Apple TV, Amazon, with Prime, Netflix. That's who they're competing with. They're also, and I mean, you want more competition. Max, Paramount, Peacock, Sling, Fubo, Roku. Dozens of niche players who are offering free content now through streaming. Just buy a new TV. If you buy a Samsung TV, they're going to have free content on there. Not that it's any good, but still, that's your competition. So I ask, if you really own Disney right now, how are they going to grow? How are they going to keep their existing subs, given the highly competitive marketplace? Also, not only is it competitive, you're not producing a lot of new content, and you're raising prices and putting ads all over the site. That's why they're warning. This is their growth model. They're going 100%. That's Disney's growth model. It's not building 1 million parks. It's not just generating a shitload of movies, which we could generate instead of 1 Marvel or 2. You'll generate 6 now with AI. 6 of those could go out. $1 billion movies, maybe even a little less than that. They haven't been generating $1 billion over the past couple Marvel movies. Star Wars, all that stuff. Generate all AI, all this content coming out. Have it in the movies. And then you license your content, which Sony's doing. Netflix is paying them billions of dollars to produce or to get the rights to show all the movies that they produce 6 months after they come out in the theaters. That's a pretty good business model. It's free money. So I ask you, could Disney go higher from here? Maybe. Maybe. I mean, I'm not surprised it went down 10% yesterday. But here's how you look at investing. I'm not shitting on Disney. I'm just giving you the facts here that people aren't going to tell you on TV. Oh, streaming's almost profitable. This is great. Of course it's profitable. You're not producing anything and you fired everyone in the division. You have less creativity there. You're raising prices. Of course you're going to see losses come down, but you're not going to be able to grow this thing. But this is how you approach investing. Why own Disney at 23 times forward earnings? Still trading at 23 times forward earnings, by the way. Trading at a growth multiple. The S&P 500 is just trading around 19, 20 times forward earnings. Disney has a growth multiple. But why own that when you could own Google, which is trading at the same multiple or a similar multiple? When you could own Google, it gives you exposure to streaming that you want, along with what? Cloud and AI, two of the biggest growth markets in the world, along with a much stronger balance sheet. So when you look at companies like this, at GoVX and UEC and Encore, if you look at AMD compared to NVIDIA, I mean, even right now, maybe AMD goes higher, that's fine. Maybe Disney goes higher. GoVX is not going higher, they're going out of business. But you're losing, it's the opportunity cost. Because you want to be a great investor, you should approach every company like this before buying shares. Like, wow, I really like this company. However, if you look at their competitors, and again, sure, Disney, AMD may move high, but Google has moved higher over the past 4 years. It's starting to surge right now. You look at AMD, and moved higher a little bit. NVIDIA moved a lot higher than AMD. Tremendously higher than AMD. AMD had a nice run, but now you've seen AMD crash, basically come down 25% more from its highs. NVIDIA's doing great. Price target's being raised to 1,100. I mean, you're still seeing that massive demand, but why buy these companies? Because even if they go up and you're like, hey, Frank, I made 5%, 7%, you're missing out on those 30% returns. Now, times that by 2 years, 5 years, 10 years. I mean, you're talking about a portfolio of hypothetically $1 million being maybe $1.5 million in 10 years compared to $3 million, $4 million. It's a big difference. And maybe not that high to returns, but when you're compounding over time and say 10 years, it's a big, big difference. I mean, even if it's 2 or 3% returns higher compared to, if it's 11% compared to 8%, if you look over a 10-year period, it's massive, those compounds, when you're compounding that. But if you want to be a great investor, that's how you look and that's how you approach investing in stocks. Because you're basically buying Mercedes for the price you're going to pay for a Hyundai. And that's how you want to approach investing. And you're taking on much less risk. And in the case of GoVX, it's much, much worse than that. I don't know what kind of the crappiest car you could possibly think of. But GoVX looks like it's a zero. And to me, it always was a zero. But it's sad that they use a big name on that stock. They lied to investors. It's a lot of bullshit, and you see that a lot in the mining industry. That's why you have to be careful. And someone's got to call these guys out. You got to call some of these people out because they're fucking you. And I'm done with it. I'm done with it. Enough of this. Enough. Because there's nobody regulating it. The SEC is not there. They don't care. They don't care, the SEC. They don't care. They say, oh, well, we're protecting you with crypto. You're not protecting anyone. And you want FTX. FTX may be, I think, the only company ever in the world to go bankrupt, in the history of the world, that went bankrupt and are paying out its investors more money. They're paying their investors. They're not paying them 100%. They're paying them 118%. That's how effed up things are when it comes to the SEC. It's fraudulent. It's terrible. Right? They lied too. They talked about all the massive debts and this company and bankruptcy hearings and all the creditors going to get paid, but they didn't account for the assets. They only said the liquid assets. But what about the illiquid assets, which are the investments, which are in Anthropic, which are in some of these cryptos that are up tremendously from a year ago? So nobody's there to help you. No one's there to regulate you, but you have to be careful because this shit is clear as day to me because this is, I like doing this stuff. I like looking under the hood and seeing this stuff. But it's not clear to everyone else because the CEOs are able to tell a good story. And remember, this is going to go to zero. You're going to get fucking annihilated. You're going to lose all your money. And these two guys running the company both made $3 million each while you got wrecked. And you know what's going to happen to them? Nothing. They're going to start up another 4 companies and do the same thing over and over and over again. That's why you listen to Wall Street Unplugged. Very few people are going to tell you that. I'm going to tell you that because I don't get paid by anybody and I'm independent and I don't give a shit. We'll leave it there. Final note here. 2 weeks ago, we held our latest crypto event, Crypto 2024 series. It was our third one. The live presentation, also live Q&A, where I answered, probably 50 questions, maybe more, about crypto, but different things, about the halving and everything. It was a free event. You can still view it by going to www.curziocrypto.com. But if you want to view it, today is the last day to do so. It's also the last day to get a 70% discount on my crypto intelligence newsletter. You guys know, at least over the past 6 months, pound on the table on crypto when Bitcoin was 40,000. And yes, it came down from 73 and it's 64 or whatever. And people are like, oh, we got in early. Same with AI. I mean, two of the biggest growth trends you'll see at least over the next 10 years, probably much, much longer. And the money that you could make in both of these sectors could literally be life-changing. I'm not just saying that because that's where I'm putting most of my money in the market right now is in these two sectors. That's where the market's headed. That's where the growth is. That's why I offer a special discount to Wall Street Unplugged listeners. But that discount for Curzio AI, that ended a while ago. The 7% discount on crypto intelligence is going to end tonight. So if you're interested in buying that newsletter, it's a great time to buy it, guys. I don't say that often. It's a great time because a lot of the cryptos in there have come down. They were up a lot for us. We were up tremendously. And they pull back a little bit. There's just a blip in the road. Bitcoin's going a lot higher. It may take 6 months. It may take 12 months. It's going to go to 100,000. When it does, the altcoins underneath, the good companies underneath, the Oracles and Microsofts, all these companies, the good names, not the shit, go up 3 to 1, 4 to 1 compared to Bitcoin after the halving. And we're right after the halving. We're talking about that 18-month period. It's prime right now to make big, big returns, especially with these stocks pulling back just a little bit over the past couple of weeks. But if you want the 7% discount, Crypto Intelligence ends today. And to get that, you can go to www.curziocrypto.com. So guys, that's it for me. Questions, comments, email me. frankcurzioresearch.com. Thank you so much for listening. Love you guys. I'll see you tomorrow on Wall Street Unplugged Premium. Take care. Love this episode of Wall Street Unplugged? I think you'll really love Wall Street Unplugged Premium. The Wall Street Unplugged Premium is my members-only podcast where I dive even deeper into this week's events. Well, I'll do even more than tell you what's moving these markets. I'll tell you specifically what moves you can make today. So this is going to be about trading. Put big money in your pocket right away due to the inconsistencies I see daily in the market. I'm talking about specific investment ideas I'm recommending and tracking each week that I believe will be impacted directly by everything I just talked about today. Plus, you're going to get the chance to go even further down the rabbit hole with me and my co-host, who's Daniel Creech, as we discuss which of these week's trends could turn into massive windfalls. Could the big trends that we see lurking on the horizon, also the news we're picking up from our network of insiders, which has gotten bigger and bigger thanks to you and so many people listening to this podcast in over 100 countries. And you get a chance to talk to me directly in my special Ask Me Anything Q&A session. All of that and a lot more, like premium interviews with world leaders in finance, technology, industry, and politics. This is all part of Wall Street Unplugged Premium. And becoming a member is super simple and super cheap. So head on over to WSUoffer.com to check it all out. Sign up today and you won't miss a thing. That's WSUoffer.com.
Wall Street Unplugged is produced by Curzio Research, one of the most respected financial media companies in the industry. The information presented on Wall Street Unplugged is the opinion of its host and guests. You should not base your investment decisions solely on this broadcast. Remember, it's your money and your responsibility.